Look at me, sure. Look at me, sure. I'm the captain now.
Christian Mute does not want to share his happy meals with you anymore. Today, we are breaking down a major move on the Trinidad and Tobago Stock Exchange. Agostini Limited, one of the biggest players in the region, has made a formal offer to take over Prestige Holdings Limited. And if you're a shareholder, you'll definitely want to stick around for this video. Let's dive in. Hi, folks. Welcome back to my channel, the third Bara, where we talk about investing in the Trinidad and Tobago Stock Exchange for the purpose of financial independence. I noticed that I have a number of new subscribers, so if you're listening to this and you are a new subscriber, welcome. I think you'll find a community of like-minded people from Trinidad and Tobago or the Trinidad and Tobago diaspora who are interested in or who are already owners of stocks in the Trinidad and Tobago stock market. And this is what this channel is about. As I normally do, I do a brief summary of my portfolio. I have earlier uploads where I deep dive into each holding, but normally what I do is I do a brief summary and get to the topic at hand. So let's dive in. Currently, my portfolio value is at 514,810, and the current dividend yield of my portfolio is 4.38%, and the total annual return, the CAGR, for my portfolio is 6.14%, which is very good. It seems to be steadily improving. So my strategy of targeting dividend yielding stocks that are appreciating in value over time seems to be a good way forward. So let's see. As I said, this is still a short time period. I've only been posting for the last, let's say, 6 months, almost been 6 months since my first video upload. And I've been investing in the stock market since 2019. So let's get to the topic at hand. First up, who are the companies involved? Agostini Limited, or ticker symbol AGL, is a well-established publicly listed company in the Trinidad and Tobago Stock Exchange. They are mainly involved in trading and distributing products in healthcare, consumer goods, and industrial services. They operate across the Caribbean and in Canada, and they have a Miami office now. On the other hand, we have Prestige Holdings Limited, ticker symbol PHL. You probably know them best as the people behind our favorite fast food restaurant brands like KFC, Pizza Hut, TGI Fridays, Subway, and of course, Starbucks right here in Trinidad and in TGI Fridays in Jamaica. So what exactly is Agostini proposing in this takeover bid? They are making a takeover bid dated June 17, 2025 to buy all of Prestige Holdings outstanding shares. But instead of paying cash, they are offering a share swap. Here's how it works. For every 4.8 Prestige Holdings shares you own, you'll get one Agostini share. Now, if there's any leftover fraction, let's say you own a number that does not divide evenly by 4.8, you'll be paid cash for that small portion. Based on Agostini's share price of $67 as of June 6th, the total cash for those fractions is estimated at around $80,941.58. It is important to note that this offer only goes through if Agostini can acquire at least 90% of the shares they do not currently own. That's about 17.8 million shares out of the 19.7 million outstanding. And they're offering a sweetener too, an effective 34% premium on Prestige's last traded price of $10.45, valuing each Prestige holding share at $14. So what's in it for Agostini, and why should you care? The deal is all about growth, diversification, and efficiency. So here's the breakdown. In terms of diversification, it adds a whole new restaurant segment in Agostini's business, making them less vulnerable to market shocks in any one sector. Revenue growth. Combining Prestige's restaurant brands with Agostini's distribution power is expected to boost both sales and profits. From a financial point of view, together the companies would have more financial muscle for future expansions and acquisitions. Bigger businesses can cut costs and improve profits through economies of scale. In terms of geographic expansion, this helps Agostini spread its footprint in the Caribbean restaurant industry. And from an employee point of view, employees from both companies can see new opportunities, and customers might benefit from fresher ideas and improved menus. If the deal goes through and Agostini gets 100% ownership, Prestige Holdings would be delisted from the stock exchange. It would then operate as a private subsidiary under the Agostini Group. Also, and this is key, dividend income might drop a little for current Prestige shareholders. Right now, Prestige offers a 4.6% dividend yield, whereas Agostini, they offer a dividend yield of around 2.4%. But the trade-off is that you'll be holding a stake in a bigger, more diversified company with strong growth prospects. Plus, you'll get a capital uplift by swapping into a higher value AGL share and benefit from their future growth and dividends over time. So in this deal, First Citizens Brokerage Advisory Services is the lead broker. What is interesting to note that Victor Mute Limited, VEML, is a major player here. They already own 48.5% of Agostini and 52.9% of Prestige. After this transaction, they'll control about 49.2% of the combined company. As Christian Muti is the chairman of both companies, there's a business relationship through Agostini Limited, a joint venture that supplies Prestige restaurants. So, in terms of valuation of both companies, what are they worth? So, Agostini value came in around 3.5 to 4 billion, with a per share value of 50.5, with a per share value of $50.50 to $57.31. Prestige Holdings value was between 680 to 820 million, or $10.88 to $13.12 per share. The 4.8 to 1 share swap ratio falls within the fair range. making the offer reasonable based on these evaluations from a financial point of view. So, if you're a prestige shareholder, how do you accept this offer? To accept this offer, you have to pick up the form of acceptance from First Citizens Brokerage or from Agostini head office. You have to fill it out, sign it, and submit it by the expiry date, which is July 21st, 2025. Payments will be made within 10 days after the expiry date. Can you change your mind? Yes, you can. You do have withdrawal rights. You can back out before the expiry date or after 45 days if the deal has not been finalized. What if not everyone's accepts? If Agostini gets 90% target, they can move to acquire the remaining shares through a compulsory or compelled acquisition process. Dissenting shareholders might have a right to demand fair value for their shares through a legal process. But if they don't acquire the 90%, then there's no deal. So this was my brief summary of the overall takeover bid. If you're a shareholder, it's worth considering that both the short-term trade-offs in dividends and the long-term growth opportunities of joining a larger diversified group might be some of the considerations you make. First Citizens Bank has provided some additional details as to how PHL shareholders can go about accepting the offer officially. And the offer, by the way, it's documented in a 180-page document. It's a PDF file. That's the bid circular. So enjoy reading it. So what First Citizens Bank is saying is that you can visit their offices in St. Clair during business hours. That's 8 a.m. to 4 p.m., Monday to Friday. You should have your national identification card, passport, or driver's permit accompanied with a birth certificate. You need to have a copy of your bank statement to verify your bank number for your bank mandate details. You can opt to complete, print, initial, and sign the share swap form. That's this guy here. And bring it with you. Please note, if shares are held jointly, all joint holders must complete, initial, and sign the share swap form as well. So they go on to say that upon arrival to their offices, please inform the front desk representative that you are here to subscribe for the PHL AGL share swap. Sign the PHL AGL share swap sign-in sheet at the front desk, and you'll be directed to a First Citizens Wealth Management representative who will assist you further. So I'm guessing that even though First Citizens isn't your brokerage, you'll have to go to their offices. And yeah, that's how you go about accepting the offer. Right. So that's the information on the takeover deal in a nutshell. But what I haven't shared with you yet is what is my take. And I believe my take should be a bit obvious. I guess you guys just wanted to hear me say it. Because if you look at my 11 stocks, and I've already identified that I'll be getting rid of one very soon. But when you go down the list of my stocks, you do not see Agostini Limited. And there's a reason why. And if at this moment I have free will to choose whether to buy Agostini or not, and I have not bought it, then why would I be happy to now accept this offer where Prestige Holdings Limited stocks, which is in my portfolio right now, will soon be delisted and it will be replaced by Agostini stocks. And so let me take a step back. Keep in mind, this is something I've always said, that I have a dividend focused portfolio. If you look at my returns, my annual returns from dividend is above 4%, is at 4.38%. From a capital gains point of view, the contribution to annual return is 1.75%. So my philosophy, and for those who are new to my channel, this is my philosophy. I look for quality companies that are priced below their fair value. So it's two factors. When I say quality companies, they must demonstrate that their business model is providing me dividend payments, increasing dividend payments over a long period of time. But even though I identify that sort of company, the other factor is, what is the price of that company? It must be at a bargain price for me to purchase it. And over time, I've refined my ability to analyze these companies. So for me, right now, and I'm just letting you guys know that I had intention of my next purchase to be Prestige Holdings. I was planning a very large purchase in Prestige Holdings Limited because after reviewing their annual reports, I believe their business model of expanding into Guyana was a solid business model, and they own all the fast food chains that I go to, Starbucks especially. So for me, this was a quality company, and their share price, as demonstrated by Deloitte themselves admitted, or sorry, not admitted, but reported that, wait, let me see if I can get that part of the report. Okay, so I couldn't find the report, but when I do, I will put it as a screenshot in this video. But in terms of what Deloitte reported officially for all shareholders to see, so currently, what they're saying is that Agostini's fair value lies between $50.50 to $57.31 per share. And that would make currently the price of Agostini is at $68.09 as of the 26th of June. Sorry, not the 26th of June. Let me get the current price. Hold on. Let me get the current price of Agostini Limited. So as of today, what's the price? Okay. So the market is currently will be open right soon. So currently, as of the 26th, the price of Agostini is $65. So Deloitte is pricing Agostini between $50.50 and $57.31 optimistically. And the price right now is at 68. So that means that right now, Agostini Limited is overvalued. And as I told you, based on my current philosophy, I do not purchase companies that are overvalued, regardless of what of the quality of that company. Why am I overpaying for a particular company at this point in time? Maybe if their share price drops, then I will consider it. So for me, that's one negative that's not aligning with my strategy. The current part, the other part of it, is that the dividend payments from Agostini is at 2.4%. Why would I invest in a company that is currently giving me dividend payments, which I've already highlighted that is very important to me and my investing strategy? My dividend payments for my portfolio is at 4.38%. Why would I invest in a company that almost less than half the dividend return, the dividend yield? So that's another negative. So investing in Agostini is not aligning with my overall strategy. So I don't even need to go deeper in the details of whether what's it expanding, what's its business model, etc. For me, it's not aligning with my strategy. So that's why it's not in my portfolio. However, Prestige Holdings, let's look at what they said. Prestige Holdings, at the time of the announcement, it was the value for Prestige Holdings shares was around $10 per share. And Deloitte, they value the company between $10.88 to $13.12. Wait, let me just have a look at because I'm doing this live. So let me have a look at what the value of Prestige Holdings was at that point in time of the announcement. Okay, so at the time of the announcement, Prestige Holdings shares were selling at $10.45. And Deloitte, their valuation of Prestige Holdings was between $10.88 to $13.12 per share. So it's clear to everyone, and it was clear to me before this announcement, that Prestige Holdings was trading under its fair value. What that means is that once the market sometime in the future realizes the bargain that Prestige Holdings shares were, that potentially would have bumped the value of Prestige Holdings. And of course, for those who, like myself, who were already shareholders of Prestige Holdings, that would make the capital gains increase in the future. So Agostini now is coming in and saying, okay, it's valued currently. The value of Prestige Holdings at the time of the announcement was $10.45. So we are going to offer you $14 per share in this swap deal. And that's what they are saying. But in terms of dividends, Prestige Holdings were giving me a healthy 4.6% dividend. That's based on the report. And this is the value of me recording the status of my portfolio over time. I already know what the value of Prestige Holdings was for me because I have the data in front of me. And it is here for you all to see as well. So in terms of dividends, total dividends that I've received from Prestige Holdings since I've bought it in 2019, the returns from dividends is 15%. The returns from capital gains is 31.38%. So when you do the math over the 6-year period, you would see that I had an annual return, CAGR, an annual return of 6.4%, which is interesting because when I look at the official analysis that First Citizens Bank provided to shareholders, which I will put as a screenshot for you all to see as well. When I look at that analysis, they showed a bunch of stuff, which was very interesting metrics, and they showed data which basically painted the image that investing in Agostini Limited was a far better decision than investing in PHL. That was basically, they presented that data and they used metrics which I don't use. But for me, one of their charts were very interesting, and it was the 5-year CAGR. And for my new subscribers, CAGR is an acronym for compound annual growth rate. And what this is, it's an accurate way to calculate and determine the returns of individual assets or investment portfolio. So when someone's comparing like for like, what you have to look at is not the overall dividend return or the overall capital gain return. What you need to look at is the CAGR. So going back to First Citizens analysis. In the First Citizens analysis, what they showed is that the 5-year CAGR for Prestige Holdings is 8.26%. And the CAGR for Agostini Limited is 22.70%. So, from an investor point of view, then it should seem like a no-brainer. When I say investing in Agostini seems like a no-brainer when you see that chart of 20+% annual return, just keep in mind that is the annual return experienced by investors that started their investment. Their initial investment was 5 years ago. So if you invested in 2020 in Agostini, then you would have experienced that 22% annual return that First Citizens calculated. That's not the annual return from long-time investors. Remember, there's a time period that's a factor in that calculation. Additionally, that doesn't also mean that if you now go invest in Agostini today, it does not mean that you're going to experience 20+% annual return as well. Because remember, as they always say, past performance does not determine future returns. So keep that in mind. For me, that's why you must always have a philosophy and carve through all the noise and stick with your philosophy. Question number 1. Is the current price of Agostini undervalued or overvalued based on their fair price assessment? If it's undervalued, then now is a good time to buy. So that gets a tick. Next question. What is the philosophy behind the dividend yield payments? Do they have high dividend yields or low dividend yields? Based on what we have seen, 2.4% is a low dividend yield compared to what I want. So that's an X. So in the two cases, it's overvalued based on the Deloitte fair price calculation and subpar dividend yield. So I'm not excited by this merger because now a company that I would have invested, which is Prestige Holdings, I would have invested in Prestige Holdings, and that would have that company, Prestige Holdings, currently is undervalued and it gives a high dividend yield, which are two ticks in my philosophy, which will now encourage me to invest more into that company. So I'm really hoping that this merger does not happen. I'm hoping that uh, Agostini is unable to get 90% of the remaining shares, outstanding shares. And I'm hoping that other Prestige Holding Limited shareholders feel the same way I do. If not, if you don't feel the same way I do, let me know in the comments. It will be interesting to know how many of the current shareholders of Prestige Holdings are also shareholders of Agostini Limited. That would have been an interesting bit of statistics to look at. So, I mean, we will see how it goes. If you do not submit the form, like up to date, I have not submitted the swap acceptance form. I'm still thinking about it, but honestly, 95% of me doesn't want this deal to go through. And if I submit that form, then I will be part of the reason why they would have attained the 90% mark that they need to have that takeover happen. But if they don't attain that 90% mark, then it will be interesting to see what happens because I guess the deal will fall apart. However, if you do not submit the form and they do attain the 90%, then I guess they go through that process where you have to compulsory, uh, uh, in a compulsory manner, obtain your shares, whether you like it or not. I think there is some legal uh, pathways for you to contest the purchase of your shares, but I think at the end of the day, uh, it is what it is, and it will happen. So let's see. Maybe the majority of Prestige Holding shareholders are like me, and they do not want this takeover happen. For me, uh, seeing all these fast food restaurants being absorbed into the big mega company of Agostini that has pharmaceutical, that has consumer products, that has healthcare products. I mean, it will be very difficult now to sift through their finances to figure out whether the company is performing well as it should. But I mean, it happens with other companies like Massey, other conglomerates like Massey and Grace Kennedy. So I guess that's the direction that Agostini wants to go. If you are a Prestige Holdings shareholder, please comment below. Do you like this deal? And tell me why. And if you don't like it, also tell me why. I'm hoping that we can have a really good conversation about this. And we still have time. Maybe you can convince me. We still have until the 21st, so let's see what happens. Until then, take care. See you guys later.